Good morning, traders. It's the 29th of November. We are Signal Centre Talking Bull. I'm Joe. Steve should be along shortly, but if not, we will carry on regardless, get through as many charts as we can and go through the latest headlines of everything impacting the market over the past 24 hours. So first up, let's get to those headlines, and Chinese developments remain crucial. There's been a key ingredient in the confidence for the global economy at the moment is what's happening in China. Confidence dipped on Monday as Chinese authorities looked to crack down on protests in Shanghai. There was, however, a recovery in the Asian session following rumours that there would be a Chinese reversal of the zero COVID policy. There's been a few images spread across the TV networks showing unrest in Shanghai. I also heard and saw that there was, um, with regards to the World Cup, a lot of the angst has been generated due to that, with people in China seeing the crowds in Qatar all obviously maskless. And this is causing quite a significant amount of unrest. So much so for the Chinese government that they've actually blurred out images of the crowd to stop them seeing people without masks on TV. So going to some significant lengths to try and suppress people in China, which of course, it takes a massive effort because all of the broadcasting comes from one central place, and they're obviously then applying their own filters on top of that. So there's been a sharp fluctuation in global risk appetite. We saw an attempt to recover in Europe on Monday, but there was a renewed lack of confidence after the New York Open, with markets fretting over global recession risks. There was a fresh recovery in risk assets in Asia on Tuesday, amid hopes that China would change its policy, with further choppy trading likely to be seen during today. Hawkish Fed rhetoric continues. Latest Fed speech coming from the New York Fed President Williams, expressing some confidence that there were signs of moderating inflation and supply chain improvements. He added that inflation risks are still on the upside, and also expected that rates would not be cut until 2024. On the flip side of that, Christine Lagarde, in a testimony on Monday, the ECB president stated that rates are still in an accommodative range and that there is still upward pressure on inflation. In this context, she added that rate hikes still have a long way to go. She added that incoming data suggests upward pressure on wages, and the bank will continue to assess the policy implications. Expecting some choppy month-end trading. There was volatile trading yesterday, with month-end positioning having a significant impact and the dollar gaining support from corporate dollar buying. There will also be further choppy trading trading today as position adjustment continues, and that's expected to last into tomorrow. In terms of what's happening with oil, the prices there recovered on OPEC rumours. They were initially under pressure on Monday before recovering strongly amid fresh rumours that OPEC would cut output levels in response to the recent slide in prices. Okay, so let's take a look at some charts then, shall we, and see what's happening over the last 24 hours. So typically, Steve will start off with a look at Bitcoin. I will do the same thing. He's having some internet issues. So let's just take a look at Bitcoin and start there. So this is my chart for Bitcoin. Lots of red lines, as you can see on the price, on the chart, which are acting as resistance. So we can see here we had this choppy phase in Bitcoin where prices were moving sideways. We then sort of tightened up into a narrower range with 21.55 acting as the key level of resistance, as we can see here, before prices then eventually slid to the downside, breaking down through this key low that we posted on Saturday, the 18th of June. Really big impulsive candle, as we can see here where my mouse is. Big move to the downside. Then we saw a really impressive retest of that level the next day, but that has just looks to be have attracted further selling pressure, and prices have continued to move lower. Although they look as though they're stabilizing a little bit at the moment. We can see that key low that we posted on Wednesday, the 9th of November, hasn't really been breached yet. So price is expected to, I guess, kind of move along at this level and remain quite range bound. So for me, it is a case of selling into rallies. Certainly this market is under pressure, and I think a break below 15,512 would indicate lower prices. Steve looks as though he may have joined us. Steve, how you doing?
Hello, mate. Yeah, not too bad. Having internet issues this morning, but I'm
Okay,
here now. So
no worries. So I've just gone through Bitcoin. I don't know if you was looking at any other cryptos at the moment and found anything of interest, or shall we just move straight on to commodities? In
yeah,
fact, shall I do? I'll do FX, and you can go
yeah,
back to commodities.
yeah, lovely.
Deal. Right. Let's take a look at the dollar index then. So, as we know, was trading in a big upward trend. We saw a breakdown through these levels up here at 109.53 on this big impulsive move lower on the 10th of November. We then breached the support levels around this area at 107.58, and now that is acting as resistance. We posted a continuation pattern here, as you can see by the dotted blue lines that we have. That looks like a bearish flag to me, so we're indicating lower prices following the break of that. We saw a gap down on the 23rd of November last Wednesday, and since then prices are stalling. This key low that we posted on the 15th of November seems to be doing a pretty good job at providing support, and very close by we have a 38.2% fib level at 105.13. So while these levels continue to provide support, there is potential for prices to remain range bound up to around 107.68. But for me, it is still a case of looking to sell into rallies. If we look at yesterday's price action, pretty bullish all in all. So we made lows, testing these lows that we posted on the 15th of November before closing strongly on the session as markets got a bit jittery, certainly about this China situation, but a little bit of easing overnight, and we are back lower today, down by 0.4%. So still expect any rallies to be opportunities to sell. Still looking for a key break of these levels down here. So ideally looking for a break of 105.32 all the way down to 104.63 to really get things going on the downside. The flag pattern that we've highlighted indicates prices down to 99.41. And we also have a 61.8% fib level around this level as well at 99.18. So still looking for downward pressure there. Let's look at Euro US dollar. So an interesting session yesterday as well. We actually made new highs on the session, new relative highs, going above the level that we posted on the 15th of November before closing sharply lower to form a hanging man candle. So pretty bearish on a daily basis, but we are still holding support around 103.48, and still this bullish flag pattern is live, and therefore any pullbacks I think are still opportunities to buy, targeting a move up to this measured move target zone of 106.52 and also this 38.2 fib level at 106.10. So let's keep an eye on that, see what happens today. If it closes lower again today, then obviously that would be a little bit of a concern, but we're higher today by around about 0.25% as things stand. And for me, it looks like we have completed a decent looking bottom pattern and therefore can expect to see higher prices. Let's look at cable. So that retreated yesterday as well. We did see a break on last Wednesday above resistance at 120.28. And we're pretty much trading bang on that level now, but on the reverse side of it, having broken down yesterday. All in all, still looks pretty bullish. We've seen the break of this long-term downtrend, so any pullbacks really towards this region here, 117.51, I think does represent opportunities to buy. But clearly it's not going to be a straightforward move. And obviously all these rumours that we've got at the moment going on with what's happening with China, hawkish Fed rhetoric continuing, and what's going on with the month-end situation as well, it's likely to be pretty choppy for the next couple of sessions. Let's take a look at Aussie US dollar. That's up by nearly 1% as things stand at the moment. Still trying to break through this downtrend resistance line. We had a little bit of a poke above it last week before prices then gapped back down below it on Monday's trading. Trying our best to engulf all of yesterday's losses, so totally reverse the bearishness that we saw yesterday. The first step would be to try and fill this gap that we created. That will be at 67.49. If we can overcome that and start taking out the highs that we posted on Tuesday the 15th of November, then we can start looking for higher prices, in my opinion. Still got this inverse head and shoulders bottom pattern. The measured move target of that comes in at 68.74, so that's the initial target that I'm looking for on the upside. If we take a look at dollar CAD, we had a nice head and shoulders top form here. Was looking to sell that yesterday as part of my gun to the head trade. Didn't really play out. We saw a really bullish session following a gap higher on the price, but it's bang into the neckline again at 135.02. and prices retreating today, down by almost 0.5% as things stand. So it looks as though this level is going to continue doing a job as resistance. The head and shoulders top suggests prices could move lower to around 130.14, which is also where this 50% Fibonacci retracement level resides. So still looking for lower prices here, and think that this rally into the neckline that we saw yesterday could be a fresh opportunity to sell. Taking a look at dollar Swiss, that continues to hold above this trend line and around this cluster of support levels. There's quite a few going on the chart at the moment. So while that remains in place, I think we could continue to see this trade within a range. But obviously, if we do start to see some more dollar weakness, then this is going to come under pressure and we may see this uptrend line taken out. And finally, if we take a look at dollar yen, we can see that prices did try and find some support yesterday at 137.65, which is the previous low that we posted on the 15th of November. Posted an impressive looking hammer candle yesterday, actually, following the move to the lows, but we are on the back foot again today, down by almost 0.5% as things stand. So I think if we get a close below 137.65, then that would indicate that the pressure remains on the downside and we can start looking for these support levels below, the first of which comes in at 135.58. So for me, I would be selling rallies in dollar yen, expecting lower prices, potentially all the way down to this region here, which is around 131.20. So that's the majors covered on the FX side. I'll hand over to Steve. He can look at some commodities, and if there's any requests on FX markets, we'll come back to those in a minute.
Okay, mate. We got a request for Euro New Zealand dollar. I don't know if you want to dive into that first, or I can jump in.
Yeah, let's go, shall we? Okay, so this is my daily chart on Euro New Zealand dollar. So it was into a major level of resistance that's highlighted here by this blue line at 173.47. So we did see prices chop around this level without really holding onto it and consolidating above it. So from that point, we saw a break of this bullish upward move, and now prices look to be trading in a short-term downtrend, with any rallies towards the upper end of that downtrend line attracting selling interest. We saw this again yesterday. It pretty much touched that level to the tick before then reversing. If we look at the price action today, as it stands, we're forming a bearish engulfing candle. So we're engulfing all of yesterday's gains, which is obviously not a great sign. If we had seen a break yesterday above the downtrend resistance line, then I think we could have formed some sort of wedge pattern, which would have indicated higher prices. But it doesn't look as though that's the case today, given that we are seeing that pretty sharp reversal. So we do have a support level at 165.20. I would not give up on this wedge just yet. And if it does get down to these levels at the 61.8% level, that could be a reasonable area to try and speculate on some longs, keeping your stop quite tight, looking for an eventual break of this wedge to the upside. But it's still trading in the wedge. We are not getting really any encouraging signs this morning, so I wouldn't be buying just yet. I'd be waiting for more optimal levels, which I think, as I say, at 165.21. We can maybe think about some speculative longs there. Or alternatively, if we get a break above the high that we posted yesterday, then that would confirm that the wedge has completed and we can start looking for higher prices. So for now, case of buying dips, I think, and really looking to get more excited once we can break above this level here at 168.46.
Nice one, Joe.
Over to you, Steve.
Excellent. I'm going to take a look at gold to start with. We'll go through the commodity sector. Joe's covered off Bitcoin pretty flat yesterday by the looks of things. I did a video on gold yesterday, so it's fresh in my mind. I can sort of like run through all the different time frames. So overall, the long-term pattern, we've got this potential double top formation. It was confirmed by a break of the neckline on the week of the 19th of September. However, we have had a bit of a throwback, which stalled in front of some major resistance close to a 200-day moving average and a previous swing high, which was up to 1808. So if we look at the measured move target for that double top formation is a move down to 1281. So that's the overarching formation we're looking at. However, the daily picture paints a slightly different picture. We were in this bearish channel. We formed a base around about this 1615 level. If we go back all the way, long way to the start of 2020, this is pre-pandemic levels. We had a swing high here. We broke through to the upside during the pandemic, and eventually that formed a bit of a support level. So especially we've seen that in the last few months. September, we've got the low there, October and November, all posted lows around 16.15. So that for me is a key support level. We broke out of the channel formation on early November, and since then we've seemed to have sort of like formed a bit more of a brighter picture. The resistance came in at 1735, and that was from a swing high from the 12th of September, and also from the 4th of October. So that was decent resistance. It's now turned into support. You can see we've broken higher. Let's get a little bit closer look. Broken higher and moved up towards a 38.2% Fibonacci retracement of the down move from the highs. We stalled in front of that. We also stalled in front of this more solid resistance at 1808, which we highlighted on the weekly chart. And also you can see this 200-day moving average sits above the market, almost like a additional cover for the bears. So this was an impulsive move higher. We've got now potential for an ABC correction, possibly targeting a move down to 1712, but we still have that resistance intact at 1730 to 35. We got close to it yesterday. The low on the day was 1740, just below there, and this morning we've pushed aggressively higher, maybe a little bit of weak dollar adding to that. So looking quite positive at the moment for the sort of short-term picture. One thing I did look at on the daily chart yesterday was the dollar index. I know you cover this, Joe, but the 200-day moving average is coming in quite nicely and forming this bullish hammer type candle. If we look back at previous support, this seems to be setting up quite nicely. Potential maybe for a double bottom if we can manage to get above the neckline at 108, and obviously this will have a negative impact on gold itself. So that's the sort of like the formations I'm looking at in gold. On the 4-hour chart in gold, we did break below the Ichimoku cloud, so potential for a short-term downtrend. However, the last 12 hours have almost put a stop to that. Don't know why there's a trend line in there. That's a potential trend line. You get them 2 points. You need a third really, but a more obvious trend line would be taking a move maybe from there. So the resistance effectively coming in around about the 1760 level. That was the open and the close and the open for the Monday's price action on a 4-hour chart. So that's yeah, that's what I see in gold. Got a little bit more to do to sort of really understand what's going to happen there. So we'll see some volatility, I'm sure, this week. The inverse head and shoulders formation in silver, it has basically broken through the neckline, come back and retested. We're retesting at the moment. There's support coming in around about the 2050 level, and resistance around about 2223. And also a little bit further up at 2250. So there's an area of resistance above. We're trading again around this 200-day moving average. We've had a crossover on the 55 100-day moving averages, and that should add a little bit of support for the bullish picture in silver. On copper, we've seen a nice reversal yesterday. Again, we've got a potential for a double bottom here. We've sort of saw the low from Monday and the low from this Monday, so a week of testing this support. 55 and 100-day moving average sitting just below this at 350. The support coming in at 354. Now the neckline for this potential double bottom is 368. A break above there really opens up the upside and targets maybe a move up towards that 200-day moving average at 392. Crude oil, we broke below the major support yesterday, but have reversed really sharply. So this looks pretty positive at the moment for crude oil. This is WTI crude oil. It's a morning star formation. We've seen the sell-off from Friday, the Monday turnaround, the spike lower, the turnaround, and today's rally higher. So if we can maintain these levels going into the close, we've got a good potential, good base for a turnaround. Remember, we were looking at the potential for a double bottom. The neckline for this is up around about the 92.20 level, and support, we're back above support at $76. Similar sort of price action, obviously, in Brent crude oil, and we had probably a better formation forming. The lows were pretty much on point. 82.35 was that support level. Again, a break below there yesterday, the flush out, but ended up with a bit of a doji candle yesterday, so a morning doji star formation. Good price action today. Really need to sort of like maintain these elevated levels again to sort of like confirm this potential turnaround. The neckline, again, thinking about this as a double bottom formation, because we still got the chance of that. We haven't had a close below the double bottom. That's up at 98, 92. So, but in the short term, really looking at levels between 88 and 89 to really sort of like test whether this is going to remain pressured, or we are forming a base. Again, the same sort of price action in natural gas, had that spike lower. We've got an inverse head and shoulders forming. This may be a retest of that neckline, or it's dipped well below it. It's still sort of like managed to close above the 200-day moving average. So that's a positive. We've done that now for the last 6 days. Price action this morning quite muted, really looking for an extension higher to go with the float on this inverse head and shoulders formation. But yeah, it feels like we're on a bit of a teetering. Turnaround Tuesday always seems to be a phrase which we used to coin many moons ago on the floor, and it always seemed to the market seemed to turn around on Tuesday, or really sort of like throw a spanner in the works to the intermediate trend. We'll see by the end of the day whether it's the case again today.
Indeed. Okay, let's take a look at some indices. Steve, I'm going to take a look at the Asian indices actually to start, because there's some interesting things happening there, which I guess could filter through to the European and US markets. As we've seen or heard, the Chinese developments do remain crucial. There are rumours that they will be reversing their zero COVID policy decision because there's massive unrest out on the streets. And I mentioned before you came on the screen that they had been broadcasting the World Cup, but actually blurring out images of the crowd because obviously everybody in the crowd's maskless. So
Right.
that's been causing a few issues, I think, and creating more unrest about these lockdowns. So we are seeing a pretty sharp reversal in a number of the Asian indices this morning, and it could have some, significant impact, certainly from a chart perspective. So first of all, look at the China A50 market. So this has been trading in a pretty severe downtrend for a while. It hasn't kept pace with the rally that we've seen in some of the other markets. But interestingly enough, today, the green candle that we're posting so far is on course to close above the downtrend resistance line. The next level to focus on is the high that we posted on the 14th of November, which comes in at 12,678. So if the market can continue this bullishness that we're seeing at the moment, and we can close above this level, then that may indicate that we could see a fair amount of short covering and more appetite for risk in the Chinese markets. And obviously, China, the sort of growth hub of the world, if that comes back online, I think it really could improve the outlook for a number of indices globally. I think they've all been kind of thinking that this market would start turning around soon, and that's why we have seen the risk move that we've seen in a number of indices. Interesting enough as well, on the Hong Kong 50, so the Hang Seng market, we can see here that this is also trying to break out through the downtrend resistance. I've actually highlighted an inverse head and shoulders on this as well, and it's an upward sloping one. The neckline comes in at 18,465, and we are coming pretty close to that level now. If this bullishness continues today and we see a break above that level, there's a hell of a lot of fresh space for this to move into on the upside. And I would imagine there's a fair amount of stop losses somewhere around this region as well, which if they all start to give way, we could see a big short covering move to the upside on some of these Asian markets, particularly the Hang Seng. The other market to look at is the Shanghai Composite. Again, an inverse head and shoulders forming here and a break of the downtrend as well. We are testing the neckline at the moment, certainly a little bit above it at the moment at 3145. If we can see a closing break, we've seen a big gap to the upside, and if we can close above this level, then we are putting in place some pretty important reversal patterns on these Asian exchanges. So looks quite promising, I think.
It
We've
does,
seen
mate.
anything on the US markets to back that up?
It doesn't feel like it at the moment, but I wouldn't sort of be surprised to sort of see some turnaround on the Tuesday. This is the daily chart on the Dow yesterday. You can see that it was a pretty horrible day for the Dow. It engulfed the previous 3 days of price action at this major resistance level. So we have got to sort of like look at that and think, that's interesting. Is it a top? Now, so yesterday's candle is negative. Today we haven't really done a lot, but we've got a few hours before the US Open. Maybe they'll take a little bit of warmth from what's going on in the Far East. But at the moment, no, doesn't feel like we've got anything great going on. The 4-hour chart remains bullish at the moment, especially from a trend perspective. We've got the Ichimoku cloud, one of my favorite indicators for just giving you a quick indication of what the trend is on any time frame. So on the 4-hour, we're still in positive territory. We're not far away from turning lower. So be aware of that. The last 12 hours have been pretty muted, especially after the aggressive sell-off yesterday. We are below what I consider resistance, the 34,000 level. It was prices stalled at resistance all the way back on the 14th and 15th of November. They acted as support around about the 23rd of November, and we've broken back through it. So the 34,000 level is quite key. If we manage to stay below there and project lower this afternoon, we could be getting through the cloud and maybe starting a turnaround at the top. But obviously, yeah, let's see how we interpret, or the US interpret, what's going on in the Far East. On the NASDAQ, similar sort of price action. Yesterday, we had a real sort of like strong reversal. We've got support down at 11,500. That is close to breaking the 4-hour chart. Let's take a look at the daily and just see how far we have retraced. Yeah, pretty much given up most of the gains we've seen over the previous 4 days. That started, the reversal started for the NASDAQ on Friday, followed through on Monday. And yeah, we're looking at 11,500 really as the key level. If we can, we're in an inverse head and shoulders formation. This feels like a retest of the neckline. So I wouldn't give up complete hope on the continuation or the recovery higher, but NASDAQ seems to be the one that does take the hit more than anything nowadays. From the S&P perspective, we have hit them. We've hit an interesting level around about the 4,044. Now, this was a measured move target for this inverse head and shoulders formation that we highlighted, which was slightly different to the other markets. And we projected higher, stalled at the this projection level. Also, the 200-day moving average coming in and hovering over menacingly this market. So this has resulted in indecision on the Thursday and Friday last week, but the reversal on Monday was quite key. Now, support comes in at the 100-day moving average, just below around about 39.23, and also this low that we formed on the Thursday the 17th. That comes in at 39.05. So that would be really the sort of like key levels to watch until we, once we break out of this sort of like band of sideways trading. Germany 40, I quite fancied this yesterday on the gun to head, and it worked out really nicely. And I'm still short of it myself. So hoping for it to continue this move that we've seen. An evening doji star formation on the daily chart has been confirmed now. Really need to sort of like push below the 14,300 level. Then support should come in at 14,130. After stalling at the 61.8 fib resistance and this band of resistance, which was ominously sitting above. We are looking like we're getting a crossover in the 5500 day. So I feel like if we break below 14,125, we should have some sort of vacuum, which lands us right back at where we should see some good support down around about the 13,200 to 13,500. That's what I see on the European side. Quick look at FTSE. That's rallying into resistance as we speak. So looking a little bit more positive than the others. We've got some. We've had a really strong rally, almost exponential. Maybe we're sort of like running into a bit of heavy resistance from the August highs. And yeah, let's see. You sort of people going with the flow on the FTSE this morning. So yeah, that's about it, Joe. We can take a look at guns ahead now, I think.
Oh, you seem keen to do that today, Steve. I wonder why that
Hey,
could be.
wonder why that is.
Yeah, okay. Let's take a look at the trade ideas. Actually, first of all, just let people know what it is that we do if you're new to the stream. So each stream that we produce, we also come up with trade ideas live on the stream in the hope that they play out between now and 9 p.m. UK time. So we come up with them pretty quickly as if we had a gun to our head. What would we trade today? What would be our favored trade to look at right now? Each of the ideas that we publish must have a stop and a target. They must have risk reward ratios better than 2 to 1. And they're all placed at market and published to our TradingView profile. So if anybody wants to check them out, it's very simple to do so. You just go to signal_center on the TradingView website, and then you'll find us there and you'll see all of our previous trade ideas. So yesterday I took a look at selling dollar CAD, expecting some dollar weakness, and didn't get it. I was actually stopped out on that, although it is now moving in my favored direction. And even if I had been a little bit cuter with my stop and put it above this swing high from this period here, I still would have been stopped out. So nothing doing there. But Steve saved the day with his trade on the DAX 40. He was selling into this gap. Got a nice entry on that yesterday. If we click the play button, we can see that it just continued to move lower from his point of entry, eventually going on to hit his target before 9 o'clock, making 3R as a return on that. So well done to you, Steve. Cracking win for you. You're just below your all-time high on the P&L for the gun to the head trade. So
Oh, you're trying
yeah,
to put me off
nicely
now, aren't
done.
you?
No,
Yeah, I think that's like
I'm
you're
singing your
sort of like,
praises, mate.
yeah, I know what you're doing. That's like that's tactical. That
We're
is.
all in it together, mate. I don't want you to lose. You saved
Of
my
course
bacon
not.
yesterday. Right,
Excellent.
what you got today, Steve?
Um, well, there's a
I've got
couple. I'll
one
tell
ready
you.
if you want me to
Go
go.
on. Yeah, yeah. Go with yours. Yeah.
Okay, so I was looking at the FX space. I mean, I quite liked what I saw from the Asian markets. I thought, they were looking pretty strong and pretty robust, and yeah, very close to potentially breaking out here on the daily chart on the Hong Kong 50. But it was actually an FX market that I wanted to take a look at, and it was sterling CAD. It's trading in a pretty decent uptrend. I mean, pretty scary looking candle yesterday, if we're honest. A big hanging man candle, shooting star candle yesterday, which isn't particularly great. But what I was looking at was on the hourly chart, because I am looking essentially at an intraday trade here. And you can see it's trading in a pretty neat upward channel here. The pullback that we've seen over the last hour found some support, and we posted a bullish engulfing candle over the last hour. Just zoom in there so you can see it. So I was looking at taking advantage of this, looking for a move back to those highs. So my entry is now a little worse. It's a 161.45. So just move that up to show that. Looking for a move back to these highs at 62.97. And I'm going to have to tighten my stop to make that risk reward a little bit better. So going with a stop at 60.75, give me a risk reward ratio of 2.13. So looking for a continuation higher in line with that bullish channel. So that's my idea for today. Steve?
Very nice indeed. I'm sort of still struggling a little bit, but I'll tell you what I've just seen. Okay, is this something here? This is a 4-hour chart in Bitcoin. 4-hour chart in Bitcoin. We've broken above the downward trending resistance line. This was from the spike higher on the 10th of November, and also a couple of points here over Saturday and Sunday, this the weekend just gone. And we've had a nice little, we've posted a bit of a higher low here and moved higher. So we are in positive territory in terms of trend on the 4-hour chart. The daily chart looks to be forming a bit of a bullish engulfing candle. So a couple of positive things. We have got resistance above, but I'm just looking for an intraday trade idea. So potentially we've sort of, if we look at this as like a bottoming pattern, yeah, we've got sort of like 3 nice points. Looks quite tasty. Looks like it's broken through this neckline. So the support I'd expect at 16,360. Looking quite positive on the hourly chart, maybe for a little bit of a push higher. Now let me get rid of a few lines that just could cause a little bit of confusion. Just focus on, yeah, let me just like remove all the drawings. That's probably better. So this looks like a bit of a bullish flag formation. I'll paint that on there. It's still early doors. So nice little bullish flag. The hourly chart is pretty strong at the moment, and obviously plenty of room to the upside. You know what Bitcoin's like once it gets going. So I'm going to go with this short-term trade idea. Keep it quite a tight stop, 16,000. 386. That doesn't feel that tight actually, but it is quite tight when it. No, let's. Yeah, we can't go much smaller than that. I like to go for at least a 3-to-1 on things like this. It would only require a sort of like a small rally. The measured move for this. Let me show you what the measured move is. If we're taking it from the bottom here. Something like 16,841, so it's well inside the measured move. So the bullish flag formation on the hourly chart, looking for a break of it, potential bullish flag we'll call it, and looking to target a move to 16,786. The stop is at 16,386. So as I say, pretty
What was your
tight.
entry?
Entry 16,486. So 100 tick stop.
Okay, brave.
Yeah. Yeah, if it does feel it in sort of Bitcoin, it could be like one little sneeze from Musk and that's all wiped out.
Yeah. Indeed. Okay, so there's 2 trade ideas today for people to check out. They're going to be published to our TradingView profile. Mine's already there. Steve's doing his right now. In terms of what we can look forward to on the rest of the session, later today we've got the Bank of England Governor Andrew Bailey's testimony. That's at 3 o'clock UK time. And at the same time, we've got the latest read on the US consumer confidence number. So it could be a bit of interest there. I think the main story at the minute probably is still China. And we're keeping an eye on those indices because they do look to be very much on the front foot, expecting maybe some sort of reversal in policy. And if that does happen, then it could spark a bit of a risk rally across a variety of assets. In terms of what's happening for the rest of the week, tomorrow we've got the Fed Chair Powell speaking. So we'll be keeping an eye out for that. Then on Thursday, we've got the US ISM manufacturing index, followed on Friday by the US non-farm payroll number. So lots happening, lots to keep us interested, lots of volatility for you traders out there. Hopefully this video was useful today. We're back as we are every day. Please feel free to get involved in the stream. We love your comments. Thanks for everybody that took part today. And we'll be back in the morning.
Lovely. See you then.
Have a good day.